Hello, West Pacific Market Analytics, and it's Glenn here with the West Pacific Week. Hoping everybody had a really great week. We're moving forward into December rapidly. Time is just flying on by. Time, right? So I want to just quickly start out with a brief discussion. I don't want to get too much into it. I want to get straight into the data modeling at a key point in time. But I want to emphasize something here that in one model we're going to be looking at that's really important is in the 16 or going on 17, maybe 18 years now since I started this idea of a physics-based hybrid analytical modeling system to think totally outside of the box and not so much just seeing price, but more so understanding time. And what was so key is that early on in the project, I had some, from my earlier years, I had some data models that I always liked a lot. And I think as I began to develop the different data models into this new hybrid system, I got a bit confused, and I think that model blinded me. And again, I've talked about that, and I want to go over it one more time this morning. And I want to completely own all my failures and let you know that those failures I am actually very thankful for. You know, everybody puts everyone down for failures, don't they? You know, I mean, I just see it all the time, and I see it. There's so many people put down their children, and, you know, they don't realize that failure is a bigger part of life. I think 80% of the time you fail, and 20% of the time you get it right. In any sport, that is absolutely true, and I think you can apply that rule to everything. I mean, even our walk with trying to understand why we are here on planet Earth and what is this whole idea of God about. Everybody on this planet hears about God. It doesn't matter whether you decide you want to believe in it or you think it's fantasy, or whatever your opinion is. That's not what we're here for, and I don't want to go into that. But I think it's very, very important to this project. Everybody hears about him. The problem is, nobody sees him. And you know what? That came to my mind in the past 6 months, that when we're looking at the algorithmic code and try to decode this algorithmic idea, because that's what we're doing. It is all coded math. And everything in physics and everything in the universe and everything in life is simply coded algorithmic math. And it all works the same. And it's everything. And it's everywhere. So in other words, when we're looking at the code of the model, it doesn't matter what external events are going to happen. It doesn't matter about how much money they print. It doesn't matter about capital flows. It doesn't matter about anything, because within the algorithmic code simply lies the predictive future of what is going to happen. Because we control nothing. The code controls everything. And very few ever arrive before they die at understanding this and understanding the idea of seeing what it is all about. And I want to show you one model to show you what I'm talking about and what I'm saying right there, because it is very, very key. Remember, in reality, we all die. We own nothing. Potentially there's one thing we do own, and I'm not going to get into that. There's one thing that you can control the outcome of that's most key to it all. And yes, it has to do with the code. Now here's our disclaimer. Please read it while I take a sip of my coffee. Sorry to get philosophical, but really, this is about how it all works. So let's just go here real quick. Again, I talked about this idea of the M equals A pattern. And I think what happened here if you look at it, the rule of the pattern, there's two plunge moves in the pattern. First of all, is the D to E move, which you can see right here. You know, this was the 2000 to 2009 corrective move. And then there's one other plunge pattern, that's from the top of J down to M equals A, somewhere out here. Can it go all the way down? We'll see. But it's J to M equals A. So we are now topping out to what will be the second plunge pattern. Now what confused me is if you take the rule of the pattern, A to J is typically 15 to 17 years. Well, that would have put the top of J at the 2020 top. Now this, I think, really confused me to what was going on here in this final rally. In other words, I was searching, well, that should have been the high, well, maybe extended. So when we got back up here to the 2022 high, I'm thinking, well, there's your extension, it's done. And then we've driven even higher. And then I'm thinking, well, you know, trillions and trillions of money printing extended the pattern this time around out into time. But then I've come to realize that it's not so much that the Fed printed all this money to extend everything out into time, but it's simply because in the 300-year cycle, this whole bull market started in 1932. And there's so much momentum velocity to this ending move. Because remember, this A to M equals A pattern doesn't just apply to the ending 300-year cycle. You can use this pattern all over in technical analysis. We could run this pattern at any point in time. And actually, there's been other A to M equals A pattern in that whole run-up from 1932. This is just the final pattern. And thus, since we are at the final top and we had to arrive at a certain point in the pattern, that's why we have this big extension in time to this particular moment in the A to M equals A pattern. So in other words, instead of being 17 years, which put us at 2020, we've extended out to like 22 years. And thus, instead of this being J, this is J. Now, why do I think that? Well, let's go here. Excuse me. Wait, I was over here. Oh, let's go into my chat here. Not chat. Sorry, I wanted to go. Yeah, let's go into chat. I think I put it there. Or did I put it in top internals? Yeah, I did. I put it here. Let's find this. This is some models I was sharing with my members here. Let's find it here. Here, right here. Okay, let me show you this. So here in this particular model, we're modeling the market breadth. Now here's 2020, and again, here was that top. But notice that in this model, at this top, we were still here at the lower portion of the V channel. And again, the V channel is a measure of market momentum. And notice at 2020, we were only getting the momentum top of the dot curve of the directional circulation. So we are only just topping here, which means prices down here and the dot curve, or what we're measuring, this particular red line, was still only beginning to enter the velocity channel of momentum. So it wasn't finished. And you can see the accuracy of this. You notice here coming down here in the 90s, all the way down here to the 2003 low, this red signal. And there's your first big corrective move, right? But then notice when we got to this low, your V channel is still rising and still above. And where I made a mistake is this massive amount of time that is within the code of the algorithm. And again, you notice here at the 2009 low, you can see how much it came down perfectly with the signal, right? It came down with the signal here too. This is breadth. Okay, and then notice though, we finally got a bear cross up here, and notice off the 2009 low, then our signal rose. But notice this entire time in the pattern, that at some point in time, the signal had to arrive at a finishing point in the pattern. And look right here. So in other words, let's pull in here, right? Here's where I thought our J-top was. And you notice the signal was only just entering the pattern here. Hang on, there goes my alarm. I'm going to get out of here shortly. All right, sorry about that. I have to shut that off. Anyhow, so you can see here, we're just rising into the V channel. Now notice, this is really important. So here we go. We go into the V channel. Here's our first rally up. Notice down. We're in solidly in the V channel. Solid rally down. But notice we're still way down here. We're down well below the dock. Now notice the momentum is coming out in the curve. Okay, so you don't change this, okay? Because look how long it's taken. This goes back even further. We're at 1990 here, but you could push this thing back to, I said, as far in time as you want, because we're measuring the entire momentum of the bull market out of the 1932 low within this. So you don't change this blue line that I call the directional of the circulation portion of the V channel. There's this other line I call the Mach, or the momentum of the circulation, which moves much more, which is less static, right? Let's put it that way. Whereas the directional circulation is very static. You don't change it. Once it's set, it's set in stone. It's like try to chisel away at it. It's like a rock. It does not change. It takes a long, long time to change the circulation of the directional. So notice here how we've now popped out. We have completed the pattern. Momentum is coming out, coming out, coming out. And notice that price continues to rise because why? Well, this is rising. This is rising. It had to rise. It didn't have to, of course, but it could have risen to come all the way up to the wall of the V channel, which is, of course, here at the directional, and now below here, the momentum of the circulation. Can't go any higher here. And notice how it's rolling over. Now, what this is saying is this is going to roll over here into 2027, and it's going to work its way back down here into the V channel. Now, it's going to work down, and then it could come down and have another rally back up, right? But this directional of the signal controls the price of the market. And it is at a position in time where it's never been. Right? Peaked out above the velocity channel. That was up above, well above the velocity channel here and collapsing. So this measure of time, right? I've had a tendency just simply to push time way, way too much. And let's look at a couple other breadth models here while we're talking about breadth. I find this really interesting here. You notice this is the shorter term one, 2020, right? Look here in 2020 how the momentum of circulation just started to rapidly rise up because, of course, this was the final thrust move. You know, we could attribute it to money printing, but I don't think it's that. I think it's just within the code of the pattern. And again, as I talked about, this could have been a wave 4, and this obviously can be a wave 5. Again, the final wave of a massive long rally out of the 2009 low. And again, that whole move to 2009 to now could just be the final wave 5 of the 1932 pattern. But notice here, it's peaked out now right on the momentum of circulation. It can't go any higher. We're done here. We are finished. Now the question will be is how fast all this drains. I'm not seeing a massive move lower into 2027. I'm seeing a corrective move and then most likely another rally back up. So it's going to be like an A-B kind of move, but we'll see how it sets up. But you see it can't go any higher. And again, here we see it peaking out on another breadth model. You notice this breadth model? Look at the accuracy. These are all different breadth models, different measures. There's different breadth models. You don't necessarily have to measure it in one way, but you can see here how we had the corrective move here, rally, corrective move here, and then the big move up to this top, right? But again, notice here where our V channel is. It's down here now. Notice how it's collapsed here. But again, you can't rush time. And you can't rush the time in the next decade either. And we're not anymore. We're going to sit back and we're going to let the code of the data decide what we need to do. And what we need to do right now is be out of this market preparing to go short. Now, you notice how this big long sideways movement is still ongoing here. And then you notice when we corrected here, it was moving down, flatlining, moving back up, and now we're flatlining. So I want to watch for this to roll over. But you notice we're getting the whole trend collapsing away here. So this is done too. But we want to see this roll over. So there's a lot of models where we got to see this sort of change in time happen. Okay, we were looking at Soxal. You notice Soxal, it's look at this big line pattern of time. Let's go back to 2020, right? So here's our timeline running across time, right? Now you notice here that we came down and we tested the dot curve here at the 2020 low. What a trade. Look at the trades in Soxal if I'd figured this all out sooner. 3 to 72, right? And then when it got up here, it topped out. It was getting too high. Look at the V channel still up here, but it was too high. It rallied back down to 6, back up to 69. Because you see, we still had the V above and rising. So from down here, we still had the V channel above. We had our gate controller above here as well. Now this is all going to have to roll over now going out here. So we came up. Now here, you notice momentum was just topping. Here was our corrective move down, which was all part of that corrective move in 2025 in the market. And we got way oversold here. Look at in April at 720. Where was I staring at? We should have been all over this. Because you see how the V channel was still back above here? And we rallied from 7 to 50. But look where we are again now. We're above the V channel. So now we're going to go down here. We're going to have this trend close, 28.62. You see how it held here at 28.12? So it can come down. It can test here at 28.62. But notice it's got to get down here again this year. 2027's here, right? So we're going to see this. We're going to see another corrective move in the semiconductors because we have V below now. The V channel's down here. We can't price up here. So Soxal's setting up. And we see the same pattern in the tech area. Here's Teckle, TECL. Look at that rally, 32 to 155 here. But notice the signal's now topped out. This is the first full focus on the signal in the entire model. But we've got the same look. You see it? 723 at our low in 2020, rising velocity channel, and now the velocity channel is draining. And you notice as the velocity channel's been draining, you can see out of our 2020 low, we had to rally back up here. And we did. And then we got above the V channel. Momentum topped out all the way back here in late 2023. So that's what I'm talking about not pushing time. Because as it is draining, and we'll see for now, this will start to roll over even steeper. As this is draining, then prices look working sideways and saying, well, wait a minute, I can't be up here dropping back into our channel, and then at the bottom of the channel, over rallying back to the top. Now again, this could be all part of this final thrust wave 5. But we can't price up here. You definitely want to be getting ready to short tech. We got 74 here on Teckle as again this gate, which it's got a lot of work to do because this trend has got a lot of work to do to close up below. So we're going to have to see. It's way up here, whereas here was only here. So I'm expecting it to take a little bit of time. And again, we can't rush time. But we're topping out. I mean, we for sure are topping out. Now look at this signal here. Can this even go any lower? Look how low down in the model this is. This is going all the way back, look, 2006, 2007. And again, you notice it's right down here at the bottom of the V channel. It's got plenty of room to rise up. Now, if this rises, the market corrects. It doesn't take much. Look at this tiny rise here and the big move down in 2020. And we've got a lot of room here in the V channel for this to rise, but it's going to have to rise. But notice it is totally at the bottom of the model. But what I'm watching is I want to see it turn. So you can see on a shorter term signal here, 2024, you notice here when it turned, then the market went into a corrective move right here. It topped out here and then it rallied back up. Now down here again, there's our top in February. and then we sold off. So we got to see this turn, but we're all the way down the bottom here. It's getting ready to turn, and I want to watch this signal turn and see how that sets up. So we're still waiting. I mean, we're not quite there. We're getting really close. I mean, look at this signal here, right? Look at it all focused up top here now. Every single signal. Look at a signal out of 2009, a signal out of 2016, and a signal out of 2020. These all key points in the model. Okay, the 2020 low, the 2016 low, and the 2009 low. And now all three signals are way up top here. And then you notice what we're measuring here. Look at this parabolic blow off in this black internal. You see it? It's just gone parabolic out of the 2020 low. And we see that parabolic blow off in a lot of the data. So let's go over here. Let's go over into the internals. And let's finish off here because we're getting 20 minutes. And there's a lot of data I could share with you, a lot of data we could look at. It's very interesting. I'll come at you next week. Like I said, we're setting up. We could be another few weeks, even into month end, before this thing really wants to finally roll over. So we're just going to have to see how that sets up. And I've been talking about a lot of this. So we don't want to rush it. Well, we don't want to do. So let's go down here. This is all stuff we could go over. I wish we had more time. We'd look at all of this. I mean, a lot has to happen here, okay? Here, look at this right here. You can see, right? Here's your corrective move down, right? And then we correct it back up. So this should be topped out right here. And you notice here, coming out of the 4100 low back in October 23, it broke out again of the V channel. So again, look at this signal too, is topping out, topping out, topping out. Again, long term here, this is the 2022 corrective move here. We can't price up here. This has got to all drop back down into the V channel here. So we've had this big final pop out, which could just simply be, again, that technical final rally move up. You know, this wave 3, this wave 4, and this wave 5. So we'll see. It could take a bit of time. We don't want to rush it, but we're going to see it. We're going to see it. This needs to go from here to here. So everywhere we look, we're overpriced. We're just needing it to roll down. Everywhere, look, here's another one. Look, here, you can see this. Notice here, the signal pop out above the curve. I call this signal exhaustion above the curve. And again, the second time, we've got this signal exhaustion above the curve. Big black candle here on the weekly. We still need to see the momentum of the velocity here. Here's the velocity down here, right? So we need to see this momentum roll over. You can see here at the top how it rolled over. Here's our top in the market, and here's our corrective move, coming down both with the signal back into the channel and coming down with the velocity. So the velocity is a lot lower this time. Now, what does that mean? Well, again, that's part of the back testing long term. You know, I mean, it should mean it's going to roll over, and this should be a more aggressive move now because there's no velocity, and that means the trend should be able to drop more rapidly. So again, you can see we're set up here. Again, you notice at that last low, I should have saw that. We were still here on the signal in the middle portion of the V channel. It had room to rise, and it did, but we're now above another one that just shows we're done. So we see this trend throughout the data. So we're going to watch it. Let me finish with this. And I think this is kind of important. Is that the one I wanted to show? No, I think I put a new one up here today. Let me see if I can find this here. That was the last one. Hang on, let me look at it here. I think I put it over here in the chat. We'll finish with that. Hold on. Oh, no, that's not it. Sorry. Early in the morning here. Let's come down here. Yeah, I put it up right here. Here, take a look at this. You can see when this red indicator sold off, the market sold off. So you can see right here, here's the 2000 move, here's the 2007 move, here's the 2020 move, and here we are today. So look, it's breaking. And notice we had that first big sell-off. But again, it could have needed this final rally as a wave 5. It's not higher, folks. It's not higher. And notice before 2020 broke, you notice we were already coming down like we were already coming down here. And see that big sidebar, how it kind of stalled out? You see here this sidebar, how it kind of stalled out. And then notice here, I drew two lines. You see the sidebar, how it kind of stalled out? And now notice right there, you see it right there? It started to break back down. So it's heading down. This is a top. I mean, this has never been wrong. And this has to do with the banks. So let's finish there. You just want to be getting ready. Make sure you're out of all your positions. If you got something you want me to analyze, if you have anything you want me to analyze, a portfolio, anything, get a hold of me. I'd be more than happy. I'm here to help. Okay? Even if you don't want to join, you want to get a hold of me on the phone and say, hey, Glenn, I want to get your opinion of something. Email me. Give me your phone number, or I'll give you mine, and you can give me a call. We'll talk about it. Anything you want modeled. And we do the same thing when you join the Member Discord site. As I pointed out, here's my email if you want to get a hold of me. On my Discord member site, if there's anything at any time, you say, hey, Glenn, can you take a look at this for me? Sure, give it to me. Because understand, all this data works in anything. You can plug and play it into pretty much everything. It will model anything and be predictive of future time and price. So if you want something modeled, get a hold of me. Also, anyone out there, they might have contacts. I'm looking to get back on board with a team. I would like to do analytical work, and I tell you what, if I get involved in any team, I just want to be that backup. So you might have a great team of analysts that are great at what they do, but I can be kind of a check. So in other words, your models are saying X, Y, and Z should happen. You can say, let's have Glenn take a look at it. I run it into my model. I say, I agree. You guys got it right. It looks perfect. So then we've got a double confirmation. Or I could say, wait a minute, I don't quite see what you're seeing here. Let's take a harder look at it. So I'm open to joining a team. I would love to join a pension fund that's managing other people's money to help them, direct them with their investments ahead, because I'm telling you, you've got to be careful or you're going to get crushed and wiped out. So if you want to get a hold of me, have a conversation, you know somebody wants to do a podcast, be open to that, anything at all, let me know. Get a hold of me, destinytrading@gmail.com. Glenn, have a great weekend. I'm out of here.